UK house prices have been falling since they peaked in summer 2022, and over the past year they've lost around about 6% of their value, and these prices are expected to fall further throughout the rest of 2023 and into 2024. However, the potential house price data that we see released over the next few months could be very, very strange, and it may not make sense to a number of people, and it could lead to some very, very poor decisions. So in this video, I want to explain potentially what is about to happen so that if it does play out as I'm expecting, you guys can make the right decision for you. So whether you're a seller and you're trying to figure out how much you need to drop your price, or whether you're a buyer and you've been sitting patiently on the sidelines for the past year and you're planning to wait for another 6 months or 12 months, but then you see this data and all of a sudden you kind of doubt yourself and spring into action. Hopefully watching this video will prevent that from happening. It will stop you making an emotional decision, and you can cut through all of the headlines you're going to see when this happens and just look at the cold, hard data and make your own decision. So in front of me, I've got the house price history from both Nationwide and Halifax, who are two of the largest mortgage lenders in the UK, and together account for around 25 to 30% of mortgages that are lent against purchased properties. Now, this isn't going to be a full picture of the UK housing market, as it doesn't account for cash buyers, which in a falling market are likely to be paying below what mortgage buyers are paying. Unfortunately, that's just the way it is. So potentially the house price falls are even greater than what we can actually see at the moment. But despite the fact we are expecting falls to get potentially even worse, we're expecting the rate of these falls to accelerate as we head into the winter period where the housing activity dies down even further. We might not see that reported in the figures that both Nationwide and Halifax release. And when the media reports on these figures once a month, they generally focus on the monthly figures, but also the annual figures. And this is where things are going to get very, very confusing due to what happened to house prices at the end of 2022, just after the mini budget and the few months that followed that. We're now getting to the point where we're 12 months after that. So for the past year or so, we've been looking at the annual rate of house price increases, swapping from an increase to a decrease, and we've been seeing the month-on-month falls. And that annual rate has been getting worse every single month pretty much, because at this time last year, house prices were still going up. So if house prices were still going up last year while house prices were falling this year, that's why that annual rate has changed around so much. But what we're about to see over the next few months is a very confusing period where we compare what's happening now to what happened just after the mini budget, where we saw quite a sharp drop and then a small recovery. So what I've done is taken all of the data over the past year or two, I've created this spreadsheet, and we're going to map out potentially what's going to happen if we see a consistent fall, a consistent monthly fall in prices, but how the annual rate could actually improve, which could lead to a lot of false, misleading headlines, which means both sellers and buyers make bad decisions because they don't actually truly know what's going on, because they're being misinformed by the mainstream media, misinterpreting the data. So as things stand, we are currently just under 6% down from the peak. Now, both Nationwide and Halifax showed the peak as August 2022, and since then we're down somewhere between £15,000 to £16,000 on average, which is between 5 to 6%. So things are definitely heading down. There were many people saying that house prices weren't going to fall, or house prices were only going to fall 5%, and it's only going to be a minor correction. Well, we've already ticked that off. We're already down past 5%, and there is no way that house prices are going to recover as we head into the colder months when there's generally less activity. This isn't going to suddenly turn around. We're not going to stop at 5%. This is going to keep going. But the figures, the annual figures that we see over the next few months are going to be very, very confusing if it does play out as I'm going to talk about in this video. So let's assume, for the purposes of this video, that house prices are going to continue to decline at a whopping 0.5% per month. Now, my gut feel is we're going to see bigger falls than this for some of these months. But by keeping this consistent, you can see how the annual rate can be misleading. So let's put in the actual figures again so you guys can see what I'm talking about. And let's see how the annual rate responds to this. Now, the past couple of months, we've been at an average of minus 5.3%, and with Halifax just over minus 5%. But if we color this in, let's see how these figures react. All of a sudden, the annual rate starts to slow down. And you can imagine the headlines in the mainstream media if the annual rate over the space of a couple of months has slowed down from -5.3 to -2.2 or -2.3. They're potentially going to look at this and say the house price correction is over. House prices are starting to settle, despite the fact they're still falling every single month by 0.5%. Like I said, that 0.5% is just a baseline figure to illustrate what could potentially happen with the annual figures. If these are greater or smaller, of course, this is going to impact these. But this is happening because after the mini budget last year, we saw the greatest fall. So between August and September, there was minimal movement, maybe £1,000 or so. But then after September, we dropped £4,000. Then from October to November was another £5,000. So these big drops is what we're comparing it to now from 12 months ago. So this is why this annual rate suddenly slows down. And if you're a buyer and you've been sat on the sidelines and you're waiting to try and pick the bottom, which is, it's going to be almost impossible to time the bottom, as the bottoms, you won't know the bottom's happened until it's happened. But you're still going to try and get somewhere around that bottom. And when you see some of these leading indicators, and generally Nationwide and Halifax are probably the most accurate indicators we have of predicting where house prices are at this moment in time, if you see that annual rate start to slow down, you may start to think that that is the time to act. But house prices could still be falling. So it's so important to remember that you're comparing it to the period before. And it's not just Nationwide that's impacted, it's also the same for Halifax. So let's just make that text visible as well. We can see exactly the same period just after the mini budget, because we had sharp falls in, it was actually December, so they didn't drop off as quickly. It dropped off in November and December, whereas Nationwide was more October, November. But again, when you compare them, you see the annual rate actually slows down from 5.3 all the way down to 2.4, despite the fact the actual monthly change is still going downwards. And if you're a seller, again, you might be thinking, oh, I'm going to hold my price. You know, maybe we're heading towards the end of the year. Things are starting to stabilize as we head into the new year and potentially a spring bounce. I'm going to hold my price, while at the same time, the market is continuing to move away from you. Now, I know this seemed like quite a small thing, but I wanted to make this video about it because I can see buyers and sellers both being caught out by this. But the other thing to keep in mind as well is that after that, because we saw this, I wouldn't say a fake, but it was a hope-filled spring bounce for a few months where people thought everything was going to be okay. It's basically a denial bounce or a dead cat bounce, whatever you want to call it. What that also means is that if house prices continue falling at that constant rate, all of a sudden the annual rate accelerates again back up to 5, 6, or even 7% in the case of Halifax, because you're comparing the falling figures that are happening to an acceleration in prices that we saw during the spring period of this year. So hopefully you guys keep this in mind when you see these press releases over the next few months. Dig into the data yourself. Look at the actual annual price and go back and compare it yourself to the peak. This is all that matters at the moment. What was the peak price and what is the price at that particular time? And then do your own maths. Try not to pay too much attention to the monthly figures, as many of those are seasonally adjusted, and that can really be confusing. And the annual figure is, of course, comparing it to 12 months before, where house prices may have been going up or down, so it can really distort that figure overall. Now, if you want to see my latest thoughts on the housing market, I'm going to pin a link to my Twitter account in the pinned top comment. And if you're thinking about buying or selling a house at the moment and you want to see some of the Rightmove red flags that you need to be aware of, I'm going to pop up a video now and I'll see you guys over there.